Hey everyone, stocks are bouncing back hard, but bonds and gold are hinting at a different story. On deck, the craziness in US markets, the back and forth on tariffs, and 3 things you need to watch to stay ahead. Welcome to today's Market Snap. First up, let's talk about the US markets, which have been on a roller coaster. Over the past 10 days, Wall Street saw one of its worst 3-day losing streaks ever, followed by one of the biggest single-day gains on record. We're talking massive swings in value. Investors have been redirecting cash at lightning speed. Last week, the S&P 500 soared 5.7% after tanking 9.1% the week before. What sparked the rebound? President Trump dialed back some tariffs on cars, aluminum, and steel, except for those hitting China. But don't think this was a goodwill move. The bond market was flashing red flags, and without that pressure, the White House probably would have doubled down. The economy was teetering, and even some of Trump's loudest cheerleaders started jumping ship, worried about a full-blown financial meltdown. Now, let's get into tariffs, where things are a total mess. In just the last 72 hours, the Trump administration pulled smartphones and computers out of the 145% tariffs slapped on China, thanks to heavy lobbying from big players like Apple. But then, on Sunday, Trump took to social media, saying those products will still face a 20% surcharge, with more tariffs possibly coming. Meanwhile, Commerce Secretary Howard Lutnick announced new taxes on semiconductors and pharmaceuticals, but nobody knows the details yet. It's chaos out there. One money manager close to the GOP put it bluntly, "Nobody knows what's getting taxed or who's paying." Sven Hinrich from Northman Trader nailed it. The biggest rally of the year will happen the day Lutnick gets fired. The administration needs to get its story straight because it's changing every day. American companies can't plan or invest in this kind of chaos. And analyst Ed Yardeni, he's channeling Forrest Gump, saying, "Tariffs are like a box of chocolates, you never know what you're gonna get." So, how do you navigate this madness? Keep your eyes on 3 things. First, the 10-year Treasury yield. Last week, it spiked toward 4.5%, signaling a potential bond market panic. That's what forced Trump to pump the brakes on tariffs. Second, watch Scott Bessent, a savvy hedge fund guy advising Trump. He pushed for a softer stance after noticing US banks were selling bonds to meet clients' cash needs. A bad sign. Third, the Federal Reserve is stepping up. On Friday, Fed officials like Susan Collins and John Williams said they're ready to stabilize markets and keep stagflation at bay. That helped spark Friday's Wall Street rally. But it also hints at bigger trouble brewing. As Lawrence McDonald from Bear Traps Report says, the more scared traders get, the more central bankers have to step into the spotlight and bring a political response. Around the globe, markets are climbing today on hopes of calmer trade talks. Asian markets like Japan, India, and Hong Kong are up about 2%, and Europe's in the green too. Taiwan TAIEX shows hesitation. On the economic front, China drops its Q1 growth numbers Wednesday, and Europe's central bank might cut rates Thursday. For earnings, Goldman Sachs reports today with LVMH, Johnson & Johnson, and others this week. Deal-wise, CVC's eyeing a $75 billion bid for Golub Capital. General Motors is cutting 500 jobs in Canada. That's a wrap for today's Market Snap. I'll catch you tomorrow for more. Have a great day.